All right, thank you for joining. This is Dave Maddock here with Maddock and Associates to talk about the patient-centered outcome research fee. During this presentation, we'll talk about what the PCORI fee is, who needs to pay the fee, how to determine what the fee should be, and how to pay the fee. So Maddock and Associates, we're independent brokers. We've been in business over 40 years, and we're to help all our clients resolve claims issues, answer benefit questions, educate all the employees on the best ways to use plans effectively, help employers negotiate the best prices, stay compliant. And part of this is helping you understand the fees associated with your plans. More information about Maddock is at maddockinsurance.com. So before I start this presentation, I need to explain Maddock & Associates is not a tax accountant. This presentation is informational only and should not be considered tax or legal advice. Each company has different facts and circumstances which may not be addressed in this presentation. So make sure to consult your tax accountant before filing any tax documents. So first off, I want to explain what the PCORI fee is. This is an Affordable Care Act, or ACA, created this Patient-Centered Outcome Research Institute to help patients, clinicians, payers, and public make informed health decisions by advancing comparative effectiveness research. So essentially, it's a fee to fund a research program. This fee is, this institute is funded in part through fees paid by health insurance companies and self-insured health plans. These fees are widely known as PCORI fees, although they may also be called PCOR fees or comparative effectiveness research, CER fees. The PCORI fee was supposed to end for plan years ending on or after October 1 of 2019. However, the 2020 Consolidated Appropriations Act extended the fee through 2029. So we get to keep paying this fee. The PCORI fees are due once a year, and they're due by July 31st for the prior year. So who needs to pay the PCORI fee? The PCORI fee applies separately to specified health insurance policies and applicable self-insured health plans, and is based on the average number of lives covered under the plan or policy. So generally, if you have a fully insured plan, the insurance company is going to pay the PCORI fee for you. The employer needs to get involved paying the fee if you have a self-funded medical plan, a health reimbursement arrangement, also known as HRA, or a flexible spending account known as FSA. If you have a self-funded plan that's tied to a HRA or FSA, then you pay the fee just once. You don't have to double pay the fee. So the PCORI fee is based on the number of members, not just the employees. If you have a self-insured health plan, also called a level funded plan, if you have an HRA or FSA, they allow you to use the number of employees. So you don't have to worry about family members if you have just an HR or an FSA. If you have a combination like an HRA with a self-funded plan, then what you'll do is you'll file using the members for the self-funded plan, and that should also cover your HRA. The simplest way to determine the employee count is the snapshot method. You're not required to use this method. You can actually use an actual average for every single month, but the IRS does allow you to use a snapshot method, which makes it a little bit easier because you can just take your employee or member count for the first month of the quarter, the first day of the first, or for once a quarter for the year. So you only have to take your count 4 times in the year. So you'll calculate the member count using the same day of the first month of each quarter, and then you will calculate that member count for each quarter, and then you'll do an average. So a tip is to use your medical insurance billing statements, or if you use an enrollment system like Ease, you can run a premium payroll deduction report, and you can run the numbers for each month. So a quick example of how to use a snapshot method. This would be an example for a self-funded group with an ERISA plan that runs July 1 through June 30th. So what you do is you calculate a member count for each quarter. So we look at July 1, they had 80 members, October 1, 88, January 1, 92, April 1, 90. You can average that out, and you would get the 88 would be the average member count using the snapshot method. Keep in mind for self-funded plans, use the member count. For HRA or FSA, you can just use the employee count, which would not include dependents. So to determine the PCORI fee, that we're going to be talking about paying, which is due here July 31st, 2022, that'd be for plans ending in the calendar year of 2021. So plans ending last year. The fee is based on a plan year that the PCORI fee used October 1 through September 30th. So they made it a little bit complicated. They didn't just go off calendar year. Not sure why they did that. And so the fee is indexed to inflation and increases each year. So for this year, if your plan ended after January 1, 2021 through September 30th, 2021, your fee is going to be $2.60 per member per year. If your plan ended after October 1, 2021, but before December 31st, 2022, then the fee is going to be $2.79 per member per year. Plans that if you have a new plan or you just switch to self-funding starting January 1, 2022, then you'll be you won't have to pay the fee for this year. You'll be working on that next year. So paying the fee, you use IRS Form 720. This is a quarterly form that includes a whole bunch of different taxes on it, which depending on your company, you may or may not be used to using this form. It includes all sorts of things like taxes on tackle boxes, bow and arrows, there's different fuel taxes. But if you scroll down to part 2 of the form, line 133, that's the part that applies to this PCORI fee. So for the PCORI fee, you would just file it once in the year for the PCORI fee. If you're paying some of the other taxes, you might be paying this using this form every quarter. So usually, you fill out the top part with your company information, and you scroll down to part 2, line 133, and then that's where you would fill in. You would use, for our purposes, you would fill out section C or D, depending on when your plan ended. Sections A and B would be for health insurance companies. So what we're going to be following under is an applicable self-insured health plan, and that would apply to self-funded plans as well as HRA or FSA. So as I mentioned, the 720 form is a quarterly form, but it only needs to be paid once a year if you're just using it for the PCORI fee. The due date is July 31st each year, and the PCORI fee should be filed on the second quarter of 720, quarter ending June 30th. Please work with your accountant to verify the information on the form before you submit it to the IRS. It's very important. This is a tax form, so hopefully you've got some good information about how to get started on it, but then you definitely want to have your accountant verify everything before you send it to the IRS. I'd like to thank you for joining this meeting, and any questions, you can give us a call, 800-875-4490.